Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, December the 16th, the year's 2020. Let's talk trading. Winning ugly with Walmal Part 2. And for those of you just tuning in, these videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, usually we run out of time. 15 minutes goes by so quick. So do you remember where we left off on the winning ugly?
Not really, to be honest. I was kind of rambling, I think, last time. But but the reality is, if you think about it, with winning ugly, it's all about, we talk about it all the time, and that's preserving your capital, and that's the most important thing. And the problem is when you win, why did you win? Did you win because you executed everything you were supposed to execute? Did you win because you did everything you were supposed to do, or did you win because you just flat out got lucky? Now, I think that's actually the last sentence that you had on the video yesterday was that did you get lucky twice? Meaning that the market moved in your direction and you got lucky that you won also because even though you didn't follow your trading plan, or did you win because you did what you were supposed to, and so you only had one form of luck in there, and so that's what it really comes down to. One of the things that if you're any type of studier of probabilities and statistics and all those type of things, you know that when you take something, let's say you won because of luck, okay, and then on top of that you went and won because even though you didn't follow your plan, well, what you've done is you actually have to multiply those things together. It's not an additive; it's actually a multiplication. And so for us people who are not so math oriented, let's say and I understand that trading is not probabilities. Some people say it is. I don't believe it is. But let's go and say that you have a 50% chance of actually winning. Okay, and then what you have to do is and let's say you had a 50%, and then what happened was you didn't follow your plan, and let's say that added another 50% chance. Well, now what happens is your chance of winning is 50% times 50%. And if you do that multiplication across, you're now actually only at 25%. So now your chances of winning are actually only 25%. So that's not a good situation to be in. You want to maintain your 50% if at all possible.
Yeah, exactly. Because I was going to say that when we were looking at these, we look at these charts and, we look at these horizontal lines. So, for example, looking at the weekly chart here on the pound dollar, actually, this is the daily chart. Let me put it back to the week. We had this gap up, and I was looking for that gap to be filled. I still am, but it's not filling. So you see here when we broke out of last week's high, we're up 44 pips. But once again, we don't know what the next, tick is going to be. Is it going to be for us? Is it going to be against us? And if we don't follow our rules, we could definitely be in a world of hurt, as you just said, So what happens is if you win ugly, what we're talking about is you take a trade and then you just break your rules. You don't follow your plan. And then the market smiles upon you and gives you a win. That's how we're defining winning ugly. And the chance of that happening over the long haul isn't very good because you could have that one big knockout where let's just say you put on a Magilla trade when it opened and it was going and price was falling down and you think it's going to hit here and you don't have any form of stop loss, and then you come back and you see you're down 200 pips, well, it might also show your account has been wiped out. And that's what Walmal always talks about, preserving capital. That's what you don't want to have happen.
yeah, and this whole idea of winning ugly, winning ugly really comes down to, are you really following your rules or not? Nobody likes rules. Okay, let's just be honest about it. We as human beings, for the most part, now there's some weirdos out there who like having rules and everything's very static and very rigid, and but for the most part, most of us don't like having rules. I mean, let's face it. You're driving your car down the highway, down the interstate. I'd love to go and say that there's no speed limit out there. I just go and whatever I do, I just go and do, and I just drive as fast as I want. But why are the rules there? Is it there to go and make money for the government by writing tickets? Yeah, there's probably some of that. But more importantly, I think part of the reason why it's out there is just to go and put some boundaries around you to keep you safe. Because, I mean, I live out here in the Atlanta area, and, the speed limit here on the interstates are 70 miles an hour. And if they didn't have the speed limit set at 70 miles an hour, I guarantee that they'd be going through town at 100 miles an hour, 120 miles an hour through town. In fact, that they picked up a speeder not too long ago going through Atlanta, going through right through the middle of Midtown on I-75, doing 125 miles an hour. Now imagine if there was no speed limit. Well, then all bets are off. What they would do, but. Why would they do that? Why would they want to stop that speed at 125 miles an hour? Well, because, the reality is that over time, in a congested city environment, there's a good chance he's going to go wreck his car and kill himself, And
or somebody else.
Or somebody else, exactly.
Yeah.
And the thing is, somebody else in trading is, if you don't have stop losses in place, so you don't have things in place to go and prevent you from taking a particular trade, the thing is you're going to wreck your account. And there's somebody else that may get hurt, maybe your partner, it may be your family, it may be people who are depending on you for you to be able to be a trader and actually make an income. So there is collateral damage that can occur. So that's why it's so important.
Yeah, I just pulled up the 5-minute chart with the Walmal lines here in the sweet spots from the previous H1 high-low. And you can see how prices congested between the 20 and the 30. But you see here, there were some Walmal trades. And like right now, you could take up almost 2 pips. So the question is, now you're up 2.5. When do you exit? And in a blink, you're back down to only 2 pips,
Yep.
Now you're back down to, let's see. It was like 1.5 just a second. It's like 1.7. So that's money that you could have had. Now, what happens is you're up 2 pips. Maybe you want more. But you don't know what's going to happen next. This thing in a blink of an eye could shoot against you. And we've seen it happen. So do you take your 2 pips now? It's stalling. Or do you wait? What does your plan tell you to do? That's why it's so important, at least in my view, that you put together that exit playbook. Because you can find, really, if you think about it, all over the internet, you can find so many systems with the entry. It's the exit. And now you could be up 3 pips.
Yeah.
4 pips.
Using my 10-5-1 method, the reality is that, what you do is, and for me personally, what I do here is, okay, I'm up a pip, I'm up 2 pips, I'm up 3 pips, move my stop loss to -3. Prior to that, my stop loss is at 10. Okay? And it's just that simple. Can I take a 10 pip loss on that trade? Sure, I can. Absolutely. But the thing is, I followed my plan. Can I even go and take a 10 pip loss and then watch the thing turn around and go in my direction to the point at which where I would have made 10 pips? Absolutely. I can't tell you how many times I've had that happen to me. But that's just part of trading. But what that having that stop loss and taking that 10 pip loss is, what that's doing is it could have just as easily continued going up, broke that 30 and ran all the way up to 60. That's just as likely to occur. I don't know which way it's going to go. And if I did, or if anybody did, well, then there wouldn't be a market anymore. You know,
Right.
forex would go away, stock market would go away. It'd all go away because we'd all know what the price is supposed to be. There's no point in having a market because there's no negotiation that's occurring. Because that's what, when you're trading, that's what you're doing. You're trying to get the best price and sell it at the highest price.
Right.
That's trading. That's what you're doing.
Yeah. Because, once again on this chart, and I think this is a big part of psychology as we've been watching this trade right here for the past 5 minutes or so. There was an opportunity during this trade. You could have taken 2 pips. You could have taken 3. I think let's see, there was an opportunity to probably take 5 pips on my chart here. Now, the question is, if you take 2, but you could have had 5, what does that do to you psychologically? Because that's the key. If you can manage that right there so it doesn't affect you, where you don't do the I could have had, then you're not going to wind up with any of those things that we don't want to have, the FOMOs, we on the brain management, because otherwise you're going to have that fear of missing out and you might not get out. And then because then it'll turn into Romo, then you get the regret. So it's like, should I take it? Should I take it? Should I take it? And because it could go higher, and then all of a sudden that's FOMO, and then you think, okay, I took my 2 pips. Darn it, I could have had 2 more pips. So you go from FOMO to Romo, and if you get in that loop, that's a tailspin. So you've got to manage that.
It'll wipe you out. You know, it can very, very easily wipe you out because, I'm talking about psychologically, just wipe you out. And next thing you know, you're missing trades that you should take, and you're taking trades you shouldn't take, and and then you're letting your stop loss run. We're supposed to let our winners run, and stop at a stop loss. But what we'll do is we'll go and we'll let our stop loss run. Oh, I know it'll come back. I know it'll come back. And so you move your stop loss from, let's say, using my plan, you move it from 10 to 12 to 15 to 20. Next thing you know, you're down 30 pips on one trade. Now what do I do? Oh, crap. Now how do I trade my way out of this? Can I even trade my way out of this?
Yeah.
And depending on your account size, depending on how heavy you're trading, and you take a 30 pip stop loss, that could very easily wind up being 20% of your account, 30% of your account. Who knows? I don't know what you're trading, but the reality is you could go and take that much of a hit. That means tomorrow when you trade, let's say you were trading, 2 lots. Well, that means theoretically tomorrow you can't be trading 2 lots. You got to be trading 1.7 lots. And what that means is that you got to go and make a whole lot more pips to go and make your daily goal. Because let's face it, your daily goal, I say my daily goal is pips, but the reality is my daily goal is not really pips. It's how much money I need to go and make in order to support my family.
Yeah, and I think that's something important. Like, how when they have one of those school fund drives and they have that, cardboard thermometer, and every time they make $100, they like color in the thermometer. That's kind of what you need to do, either physically or mentally, with your trading. Like, you've got your core of 10 pips. So, okay, so you just made 2 pips. Well, hey, guess what? You're 2 pips closer to the 10. So now you only need 8. And so, like on this trade that we've just been watching, had you popped out at +5, you were halfway there. But had you waited, sure, you could have made more. But that's the wrong way to look at it. You need to say, I took 2 steps or 5 steps toward my goal. Now I only need to, I'm that much closer. And then it's like, and another opportunity will present itself. So in this particular case, maybe you got 2. Had you waited, you could have had 8 or 9 or 10 maybe. You can't do that. The only reason to look at that is, did you exit according to plan? And you know what? The fastest 15 minutes in trading's up. Looks like we're going to have to do a part 3. So, fellow traders, just keep that in mind, that you don't want to win ugly. You want to win pretty, meaning you want to trade your plan. You trade what you see, because it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is TheRumpledOne, over and out.